Well, the big news going on right now is all about tariffs and the trade war with China. New 25% tariffs began on May 10th of this year, and this only affects products shipped after that date. Anything that was already in transit before May 10th will not be affected by the new tariffs. So it will likely be 2 to 3 months until the impact of the tariffs really start to affect consumers' pockets, and the cost is estimated to be around $800 per year per family if these are sustained over a prolonged period. And this whole thing really creates some uncertainty with people, investors as well as consumers. They're not sure what it entails. And so we're going to try to share some insights that will help you understand how this is going to affect commercial real estate. Now, the products with the 25% tariff include a wide range of things, but some of the products include furniture, clothing, construction materials, electronics such as TVs and smartphones, while China has retaliated with 25% tariffs as well, and that will affect things like agricultural products, cotton, machinery and heavy equipment, and airplane parts. So from a macro perspective, here's what this means for the economy. First of all, the financial markets have reacted to this change a little poorly. The stocks went down. There's a lot of volatility in the stock market right now, and this just reiterates the stability of real estate. The good news is that long-term interest rates had downward pressure because of the trade war, and the Fed may step in and lower rates in order to offset some of the slowing in the economy that could result. Exports constitute about 13.5% of total U.S. GDP. China is the third biggest export destination for U.S. goods, which is about 6% of our total exports, and China is our #1 source of imports, about 19% of the products we import into the U.S. So in a prolonged trade war, economic growth could be reduced because consumption is lower, and that pace of growth could drop by about 30 basis points to the low 2% range. So how does this affect real estate? Over the short term, there's really very little impact. Lower interest rates could be a positive byproduct, and that could be sustained for a while. And it could increase construction costs because some of the tariffs are on construction products. So that could reduce the volume of construction coming online and benefit existing assets. There could also be some localized impacts. For example, Boeing is a potential target in the trade war, and that could affect Seattle. Nike is another company that could face some challenges, and that could affect Portland. Or Caterpillar, construction equipment in the Midwest could be a bit of a challenge. But really, on a macro perspective, real estate impact's nominal. The other area where we could see some challenges is on discretionary spending, which could affect retail. But it's not an e-commerce versus brick and mortar thing, because both sectors of retail will be affected similarly. So what should investors do? There's not a whole lot of direct impact over the short term. So really, the trade war merits monitoring because we could see some broader macro impacts, but from a direct impact on commercial real estate, it's a relatively minor event.